you get a cleaner idea about what the market is gonna do next. So always keep this futures chart open. It will tell you a lot more about what you are doing. About price action and volume action. So what we are focused on is the volume action, right? There are about 3 elements, okay, which go into the makings of a chart. Price, the most important one. Supporting one is volume, and the second supporting one is time, okay? And at different place, different days, different times of the session, and at different days of the week, each of these 3 play differently, right? So you know that between 2:30 and 3:30, because of the option plays and because of settlement pressure, because of this particular time, 2:30 to 3:30, the market works differently, right? And that point of time, the time becomes more important than price and even sometimes volume. But at certain times, let's say about 9:15 to 10:15, the volume component of the market is more important. A lot of traders are brought up into thinking that price is everything, and that concept is still there. Bhav Bhagwan Che, you know. But Bhav is not the only Bhagwan. Bhav is not the only Bhagwan. There are 3 Bhagwans. One is price, one is volume, and the third one is time. And if you can pay attention to these 3, especially as a derivative trader, you will cut out a lot of mistakes, okay, which you make in derivative trading. The whole idea as retail traders is to eliminate rookie mistakes. Before you start making money, before you actually become profitable, you have to think about how you're going to be eliminating your stupid mistakes. The question is, okay, what time frame is best, okay, to monitor the 10 bar cot? Whether you trade a 1-minute time frame or a 3-minute time frame or a 15-minute time frame or the 30-minute time frame, the most important time frame in the market is always the higher time frame, right? So the monthly chart is a little bit more significant than the weekly chart, and the weekly chart is more significant than the daily chart. And the daily chart is more significant than a 60-minute chart, and the 60-minute chart is more significant than a 30-minute chart, right? So it flows from there. The higher the time frame, the more is the weightage of the market, right? Now, why do I say that? Is because 1 bar of 3 minutes or 1 bar of 1 minute does not make a market, right? A lot of people, what they do is like they take a signal, okay, from a 1-minute bar, and whatever signal it is, a moving average crossover or an RSI or a MACD or whatever, okay, they look at and they extrapolate that and they expect that result, okay, over the next 5 days, 5 weeks, 5 months, and 5 years also, right? There's nothing, okay, like that ever in markets. We have something called the rule of 10 bars. Whichever time frame, okay, you're looking at, hold that signal, okay, for the next 10 bars also. So if you got a signal, say in a stock in the monthly time frame, that signal is valid, okay, typically for the next 5 months. Okay, if you have a signal in a weekly time frame, that signal is typically valid, okay, for about 4 or 5 weeks, unless something changes to upset, okay, that signal, or something contra happens, right? But that is a holding period. So same thing, okay, if you get a signal in a 3-minute chart, don't expect it to hold for the next 3 days, right? The validity of that signal is 3 minutes into 10 bars, that is 30 minutes only.
Good evening, guys. A quick sound check. So, welcome all of you to this session. And today's session is about options and how we can trade options using the line charts and the open interest along with the order flow. So, you have on screen the option table, which we have. There is a very important section on the VTrender charts, which is this options table, which is a gold mine of information. Which is a goldmine of information, and with one click you can look at whatever chart you want of any straddle chart, any strangle chart, or any option chart of any strike, be it the call or the put. So I'll just run you through the options table and how we can open those charts using just a single click, and then we will come to how to use these features in our trading. And the best thing to do would be take examples of today's market, and so that we can see what how these charts could benefit us today in what happened today in the market. So you have on screen the option table of today's weekly settlement of Nifty. So you have all the calls listed on your left and the puts on the right, and then the middle column, which has all the strike prices, has got two symbols. The first symbol opens up the market profile chart for you, and the second symbol opens up the line chart for you. So these are the straddle charts, the line chart and the market profile chart. And then individually we have the call market profile chart and the call line chart in the column which has the change in last traded price. And what all we have in this option table is we have the max OI and minimum OI, and the time when the at every particular option has got OI which is increasing and decreasing, which we can follow in the options table. So we this is a very important table which we can make use of seeing where the option writers are going wrong, because in order flow we get to know what the market wants to do, and if the writers are going opposite of that information, we know that they are going to get hit. And we will show you two examples from today, both on the call side as well as the put side, so that what we are explaining to you can also be seen on the charts. So running through what all we have on the options table, we have the max OI and minimum OI, and then we have the change of OI, DOI, delta OI, along with the total OI. So these are very important numbers, and we have these orange colored bars which show us where the maximum volumes of the option is. So on the call side we had maximum volumes in this 23,550 and 23,600. In the morning that was not the case, we had maximum volumes in this 23,500 call. And similarly on the put side we had maximum volumes on 23,500 and 23,550. So considering that we closed at around 23,550 today in spot, so it is not a surprise that the max volumes was at this 23,550 level, and the straddle guys of 23,550 guys were the ones who took the cake. So but that was not the case when we opened in the morning. So as I was saying, one click we can open any chart, be it the straddle or the option, particular option call or puts chart. And one more advantage what we have is we have the timeline on the top. So using this timeline, we can check any particular TPO or time we want the option chart. So I can take this back to the A period and see how the option table was looking at the open. So this is how we were placed at the open. And then as we go forward, we can see at the close of the IB what was happening. So you can see 23,500 had 4 lakh of open interest which was added today, and 23,500 put side there was only 2 lakh which was added. So it was very clear that this 23,500, which was also the gamma zero level at open and since yesterday, was the straddle which we had to look for. So if we open this straddle chart, opening the straddle is very simple. We just need to click on the uh, market profile chart of that particular strike. So before I go to the straddle chart, I would want to tell you, want to show how we can also open a strangle chart. Because why straddle and strangle charts are important is because in market profile, we form an balance, and then that balance is followed by an imbalance. So balance to imbalance and imbalance to imbalance is what we look for and accordingly take trades. So when we are forming an imbalance, we know that the market would be trending in one direction. So that will also be seen in a straddle or strangle chart, giving a buy signal. That is, if we are trading in options, that option would be above the VWAP and the POC of that particular strike price. So that will be the uh, way to know whether we are trending or whether we are in a range. So a short gamma market would mean that the options are below the POC and the VWAP of the day. So both the call and the put keep on adding the open interest, and both of them are below the combined VWAP and POC of the straddle chart. So how do we plot a strangle? For plotting a strangle, what we need to do is we need to select which call and which put leg we need to look. For example, we are looking at the 23,600 call and we are looking at the 23,400 put. So once we select both the legs, we have this option coming at the bottom of the screen, which shows us that the selected option pair chart is this. So we just need to click on this and we get the strangle chart. So as you can see, the strangle chart, the market profile chart of the strangle has opened. And same thing, if you want to see in a line chart, we just need to click on that link at the bottom, which has that icon of line chart, and you will get the line chart. So this is how we use these charts. So coming back to this, and let us start with the 23,500 straddle chart. The first we would have a look at the market profile chart and then the line chart. So we just need to, I'll just unselect these boxes and click on the market profile chart of the straddle. So what do we do before we start the day? We just have a look at what the straddle has done on the previous day. So this is what we had done yesterday. So obviously, if we are looking for going short in the straddle, we would want the straddle to remain below the POC and VWAP of this previous session. So as we can see, we made a move away at the open, leaving a small selling tail. So this straddle was being written right from open. So we can see the price was around 170, and even last week we had the gamma zero level at 23,400. So when the gamma zero level was at 23,400, we were following the market profile chart of the 23,400 straddle, which kept making lower lows all through the day. So the straddle, which had started at around 168 at the open, it went on to close at a price of 1. I think 1.1 was the closing price. So this is what a short gamma market would look like. So today when we were looking at 23,500 being the gamma zero level, we needed to see how far can the straddle go down to. So for that, it is important for us to one have a market profile chart handy, and then along with it, what we can do, we can have the line chart side by side. So I'll just go into a two window mode, and before I do that, I will just open up a line chart and explain what are the features which we have on the line charts. So this is the line chart, and I'll just take off all the lines so that okay. So now this is the price of the straddle, what we are looking at, and then we have the important VWAP of the straddle, and then we have the POC, which is in pink, the VWAP is in the green line, and then we have the open interest, which is this turquoise colored line. So as you can see, and then we have at the bottom we have the OI spike. So if we take the charts from today open, this is the line chart of today open. We can see the open interest has been going higher. And what the option has done is, after the open, in the A period, it has come down below the VWAP and the POC of the combo, and it has remained below the VWAP and POC. So this is how a line chart looks, and what we need to look for in the line chart is for how long the open interest is adding. So this is till this time, till 10:52, we can say that the open interest kept on adding, and then the POC was at 143. So even after the IB, where we formed we got an important cue from the order flow and the market profile chart of Nifty futures, the writers were still holding on to this. And if you go to the options table, you can see the maximum OI time in this 23,500 call was at 1042. So we had an open interest of 8,34,000 at 1042, and this that means almost 5 lakh 60,000 of open interest was added today. And a similar addition was seen in the put side also. 4,92,000 was the addition on the put side. So at 10:45, which is at the close of D period also, this straddle guys were just continuing to add the open interest in this. So I'll just quickly move away and show you the market profile chart of Nifty along with the order flow, so that we can understand how order flow supersedes the open interest, and how the order flow data is giving us information which can change the inventory. So what we did was, you can see you have the profile chart of Nifty futures on your left, and we have the order flow chart of 30 minutes on the right. So as you can see, we had a weak open, and it looked as if we are moving away from this 2-day balance in Nifty futures. So the A period went lower and the B period made lower lows. And even in the trading room, we were looking at 23450 as a support, and we are looking to short the market once the 23450 breaks. And it would not have been a blind shot. We would have want the order flow to show us some fresh selling coming in at that break. But in fact, what happened was, when we broke that 23450 at the fag end of B period, we got this 1164 LLT. You can see this green dot on the order flow chart, and this came in right at the close of the B period. And you can also see in the market profile chart how this anchored VWAP from the swing low of 11th, the Friday session, last Friday session, was showing us support. And when the order flow is showing us this big green, and you can also see the cot is also turned into green. So this information is good enough for us to tell that the downside is getting limited. So this is when even Shai had tweeted live, saying that there is no supply seen in Nifty, and the call writers will have to be careful. And this was just at 10:15. So you can see at 10:15 we saw that the downside was done with. And what happened later was, we in this next TPO we went on to climb up above VWAP. And in the market profile, you can see we have gone back into this value, composite value. So we have something called the 80% rule which got triggered, and as per the 80% rule, we were looking for Nifty to tag this value area high of 23619. So this is what we saw in the market profile and the order flow chart. The order flow was very clear. It was giving us a green cut with a big LLT buyer, and we had one more LLT buyer at 23472 also. So once we got about these two levels in the C period, we never came back below VWAP all day, and these levels held. So that was a classic case of order flow showing us that the buyer is now holding the fort. So with this as context, if we go back to the option table and see that these guys continue to add the call side open interest till 1042. So where we knew that there was some trouble for them happening. So how do we identify that? So what we do is, so I'll just explain in a simple line chart how we can use this to take trades. So we have the open interest which is going higher, and this is for the combo. So here also what we have to do is we'll have to wait for the either the POC to shift lower or the price of the combo to get above the POC and also then the VWAP. And what would be the objectives? So as we have already have one session on the line chart, so and we where we have explained where the POCs of the line charts which it lives before. For example, this is one POC of 180 from yesterday. Then we have one more POC at 165, this pink line, and then we have this POC of 144. So this was the POC last before it fell down to this 80 zone. So this 80 level is where the POC was, and that combo, the straddle combo, would get into trouble and would have forced one leg to get out if it started to sustain above this 80. And we even saw in the order flow how it was trying to hold that 80 level desperately, but once it broke out, there was a very quick move higher to exactly this POC of 144. So once we get a move in a line chart, it is very easy to identify the targets also. So how do you know that the option writers are running? The open interest starts to come down, the blue line, and then we have a move above VWAP in the POC, a dark green bar, and then we also see the OI spike, which is showing us red now. The OI is in red. So this is how we use the line charts for trades. So here, when we were clear that it was the call side which could get hit, so we can just open the line chart of the call option and see how they are placed. So from the option table, I'm just opening the line chart of the option of the 23,500 call option, and we can very clearly see how we can make use of this awesome features in the line charts to take trades. So here we can see this 1042 open interest of 834, which is matching with the option table data. So the option writers continue to write till this point, and from here it started to get above this VWAP and POC, the combo of which was at 58 to 60 zone. So I'll also show you the order flow chart of this particular option of how the order flow gives us that confirmation and gives us the exact level to enter and exit. So in line chart, when you have the open interest stalling, that is the first indication that the writing is done. And then the second point would be we have to sustain above this VWAP and the POC of the that particular option. And once we get a green bar, the low of the green previous dark green bar becomes our support, and we are looking for these VPOCs as our target. So in this call option, what were the higher VPOCs which we could look for? This is one VPOC which is at 100, and then we have this higher VPOC which is at 124, and finally we have this opening POC from previous day which is at 136. So these are our objectives, what we can look for using the line charts in this particular call option. And once we get that move above, you can see the spikes are turning red, although it took some time, and I will show you in the order flow chart how it was continuously holding that 80 level, which we saw was the POC in the straddle chart. So once it got above 80, which is this time zone around 120, you can see how immediately it went on to make a high of 136, which was that POC from yesterday. So the high made in this option, the call option was 136, and it was like it has hit that objective. And immediately, if you are looking at a trade in this, you will book out at this level. And before this, you can see how this green bar of 115 is taking support at the VWAP and POC of this call. So the line charts are very beautiful to analyze, very clear, and they are very good to use, especially on the expiry days where you get lot of such opportunities. So this is what we traded in the room also. We in fact took a leg higher. We took the 23,400 call to go long in this, but it was always on the cards, especially when we saw that setup which we were looking for. And you can see the time, the I period, which is from 1245 to 140, 115 is when we made those highs. So once that high was tagged and the objective also was hit in this call. So that is where you book out, and then this setup is done. Then you look for a fresh setup in maybe in the same option again or in the other strike price. So what it has done, what confirmation it has given us from 8 lakhs. This option, when we made the high of this 136, it has come down to 2,85,000. So whatever open interest we saw of addition of 5 lakhs plus in the option table at the 1042 time is all come out. So you can see the addition was 5,62,000, and all of this plus some OI from previous day has also come out. So this is how we use the line charts to and see whether it is a short gamma market or a long gamma market. So if it is a short gamma market, the option would remain below the POC and VWAP, and the open interest would have continued to rise. So last Thursday, the same happened in 23,400 call and put, where the open interest continued to rise in both of them. And I think the combined open interest crossed 25 lakhs. And that is the reason there was no chance of that straddle to give any long trade. So this is how we traded the call side. Now coming back to the profile chart and coming back to this, what we did was once we hit that objective of 619, we left a small responsive selling tail and we completed the 80% rule. Plus this was also the selling zone from yesterday. Yesterday we have an FA at top in Nifty futures. So we very well know that we are not as bullish as we were till now, because Nifty had been going higher since the trend day VWAP of 23158 of last to last Friday. So yesterday was the first day where we left some sign that the upside may be stalling, because this was an FA 23669 plus we had this K period responsive selling tail which we were not able to take out. So it was very clear that the upside for today was kind of done when we hit the objective. So here again, I would want to go back to the option table and show you that just like how in the IB we saw that the downside was done when we got that big buyer at the close of B period and at the important reference of 23450. On the upside, when we did not find demand about 23619, it was very clear that the upside is done. So, but even after that, what these 23,600 put guys were doing was they continued to write. And if I take you to the time of IP rate, you can see how they kept on adding open interest. And if we see the max OI on the 23,600 put, you can see the time is 145. So we already made a high before 115. But just like the writers were not aware in the morning that the downside is done, and they continued to write till 10:45, the 23,500 call. These 23,600 put guys continue to write till 145. So if we open this line chart of the 23,600 put, you can see there was an addition of 4,87,000, so which is huge. So I'm just opening the line chart of 23,600 to see if we could get that opportunity in this also. So here you can see how the open interest has continued to rise till 152. It has touched almost 6 lakhs. And then the POC in this option is shifted down right to 30. So these are all laggard writers who are coming in. This OI increase, the green bars which you see from 115 to 145 are laggard writers, and you can see how much of open interest has increased, because we were just around 2.5 lakhs at the start of the J period, and at the close of it we jumped to 6 lakhs. So all this open interest had to go out. So when how did it go out? Just like we see the previous POCs of the line chart as targets, the target in this was that 66 level, and above 66 we would have looked at 120. But what happened was the auction had started to take support at the 23,550 level. So that is the reason we just went on to make a move to VWAP. And then you can see how the open interest of this late writing all came out, and we came down to that figure of what the open interest was before these laggard writers had come in. So this is how we can make use of the line charts and take good trades. The line charts also help us to see how long the option is in long gamma or short gamma. So if we look at the straddle line chart, as long as the open interest is increasing and the premium, the combo is falling, for example, till 12:15 today, it was very clearly a short gamma market. But the shifting of the POC to the downside to this level is an indication that if you are short in this straddle, it is good you book 50% of your position and trail your stop loss to at least the VWAP of the straddle. So that is how the line chart gives us an indication of how a short gamma market can change to a long gamma market. So the shifting of POC around the lows and then a move above the VWAP will mean that it is turning into a long gamma market. Today was not a ideal long gamma market because we were not able to sustain above this VWAP. If we would sustain above this VWAP and taken out this POC of 144, then we could have looked at more upside. So this is how the line charts are beneficial to us, and this is how we use them. Coming to the order flow charts, so I'll show you the order flow charts of both the 23,500 call and the put, and show how the writers, how the order flow gives us that confirmation what we just reviewed in the option table and the line charts. So I'm going to that morning time where this option was getting written, and how it was getting written was, we can see in this big red cot which we are getting, you have minus 80,000 red cot, minus 63,000, minus 1,60,000, minus 45,000. So red cot with increase of open interest is telling us that the sellers are entering this market, and the sellers are increasing, uh, entering in a big way. So it went on to continue till 1042, I think was the highest uh, open interest which it tracked. So how do we know when the market is changing gears? So this one, we get a IB at VWAP and the POC is also being taken out. 53 was the POC in this option, the call option 23,500, and this green line was the VWAP of 57. So when these both are being taken out, this acts like your reference. 44 on the downside will be your reference, and you will look for a higher move in this. And along with this, the cot will will start showing us greenery. So green cot with red OI is telling us that the option sellers who had come in earlier are now booking out. So here you can see the green cot was coming in phases because the writer were still trying. First, they tried to hold this 72 level, but the low you can see was right at this 42 level. So here, when we made this low, the order flow is showing us zeros on the sell side. So this is why order flow is very transparent and the best indicator one can use to trade the futures or options, because once we have a view, once we have it set up, the order flow will very clearly tell us whether we need to stay on in the trade or we come out. So the option writers were trying their best, but 42 on the downside was holding, and for some time this 72 on the upside was holding. So once we got above 72, as I mentioned, that 80 level which was the POC of the straddle of 23,500, this was trying to be held by the writers. But at this time you can see how the cot is been turning green. You have the 73,885 cot, 838,000 cot, but these are still, I can say, on this lesser basis, as we are still not got about that 80 level. So again we made a dip, but the dip was being saved at the VWAP. So this is very clearly telling us that the option writers are still in problem. So again we made this swipe at 12:30 when we made that pullback low in the G period. So again, that what it was doing was it was holding that 42 level. So when option writers are in trouble, they will try everything and they'll throw what they say is throwing the kitchen sink. So they'll try all their might to hold on. But then again, the order flow and the structure of the market was such that we were still above the VWAP in Nifty futures, and we were looking for that 23619 level. So here you see at 1 o'clock again, the second time the auction tries to stop this at 80 level. But then once we made that this final dip to the POC and VWAP, and here we are getting an RB, and you can see the cot is mainly green now. If you see the cot, the red is getting smaller and the green is getting bigger. And then once it finally crossed this 80 level at 118, you can see the cot is turning completely green of 89,000. So considering that this was a 23,500 call and our target was 23,619, 120 would have been our target in this. So we hit that 120 level right in this bar. 119.95 was the high. And then we went on to make a high of 132. So this is where the option writers came out in a big way. So this is where we also hit our objective. So objective is hit and then we have hit our target. So this setup is done. So after this, we are not looking at this bar unless we get above that 144 POC, which we had seen in the straddle. Above 144, if this call had sustained, then we would have looked for a higher leg. So this is how we traded using the order flow as well as line charts in the 23,500 call. So let now we had spoken about the 23,600 put. So I'll show you the order flow chart of that option also, so that it gets clear how that put was getting written at the very last moment of the rise. So here you can see this minus 1,44,000, minus 94,000, minus 97,000. So these are those laggard writers who came in with such big quantity that even the POC shifted lower. So they were actually shorting in the hole, as Jim Dalton says. So this was clearly not a very good scene for these option writers. So you can see the open interest has been increasing because the open interest is in green and the cot is in red. So that means the sellers were adding at these lower levels. So as I said, once we saw that the upside was done, so this move in this 151 bar is when it took out all those late sellers and it gave that tag to VWAP. And you can see how at VWAP you have got this big 64,000 green and how the cot has turned green in this 79,000. So all the late writers who had come in were forced to exit. And order flow is the perfect tool to take these trades and to know when the open interest is adding, when the open interest is coming down, when it is the writers who are running for cover, and when it is the writers who are adding to their positions. So this is how we did. And even here, once it tagged VWAP, it was not able to sustain. So again, the open interest, the laggard writers who had come into this put were all removed. So this objective was done. So here again in order flow, we see zeros on the buy side. So these are very important cues which we get in order flow. And when we know that, we need to come out completely. So we don't need to even hold part of our position. So this is how we trade them. And this week has been an eventful week because in a rare time what happened is we got a long gamma scenario even in fin nifty this time, because 22,500 was the gamma zero level in fin nifty, and almost uh, all till the afternoon it was holding fort, and it was the premium of that saddle was falling. But once the POC in that saddle came down, I had even shared a tweet with that. It went on to reverse and it went on to make a high of, I think, 85. So that is how we look at these option table and the straddle and the line charts to make use of when the market is shifting from short gamma to long gamma. And the same thing happened in Bank Nifty yesterday. In at the open, long of call writers were taken aback by the strong open we had. But in the later part, when we saw the order flow showing us red caught with the market going higher, the last phase of the rise was on red caught. So we were very clear that we are not going to get into any long positions. But what eventually happened was we saw some option writers coming very late into the 51,500 put. So which is where we made a similar use of what we did today in the 22,600, 23,600 put to make use of that uh, situation. This is how we get opportunities on a daily basis, and the opportunities are more on the expiry day. So we have a wonderful setup on the VTrender charts where we have the spectrum charts. So using the spectrum, we can see where the gamma zero is and what is the expected range of the settlement. So we can see the gamma zero was at 23,500 for most part of yesterday and as well as today. And that is why we were looking at that straddle chart. And then once we saw that move coming in, the gamma zero shifted higher to 23,550 and then briefly it went to 23,600. So I think this was the time where the 23,600 put guys were entering, but they were kind of shorting in the hole, which we saw in the order flow charts also. So it came back to close at this 23,550, which was the closing gamma zero level. So these are the tools which we use and we uh, implement while trading the live market. The option table is one gold mine, as I mentioned. And although the market profile chart gives us the bigger picture of how value is forming on the daily basis and what are the important levels we need to track, it is these line charts and the order flow charts which give us the uh, good entries and the fastest entries and also the targets. So this is how we use them and take trades on a daily basis. So this is what we had for today's presentation. I will open the floor now for any questions you guys have and look to answer them. All the charts which I showed you today are from charts.vtrender.com, and we have a exclusive triumvirate, we can say, where we have market profile, then we have the option suite, and then we have the order flow. So all of them is on one platform and we make use of the triumvirate, and it's a wonderful platform to make sense of what the market is doing to and to take uh, the trades. So if there are any queries, please feel free to ask them, guys, because before we can wind up. Thank you, Nagraj. Thank you for the compliment. And our effort is on to keep coming with such learning videos so that all of us can learn and grow together. Balaji has a question asking how we can use these line charts on a non-expiry day. So we can use these line chart. The features are the same, and it is not on expiry days they become more powerful. But even on non-expiry days, we can see where the POC and the VWAP of a option is, and if the market is trending in one direction, we can use any dips which is coming to the POC and VWAP as an entry point. Nagrajan has a question. Spike is not sudden. Is there any sign before that build up? I did mention that Nagarajan 23,500 call was in trouble right from the close of the initial balance, which is at 10:15, because we saw one big buyer getting into the market in Nifty futures at 10:15. So and it was from a very important level of 23450. So we've already knew that the PLR, the path of least resistance in the market, has changed to the upside. So we definitely look at profile charts to take references from the previous day, but the order flow, the latest data is what will tell us what will happen to today's writing, because today's writing would be specifically based on today's information, today's levels. So we will have to see what, because that is what we saw at 10:42. We had more than 5 lakhs of open interest which was added in that 23,500 call. So obviously those 5 lakh guys would get into trouble if we get above the VWAP and the POC of today. And in the line charts, we also get to see the previous POCs. And as I showed you, the high of that 23,500 call was exactly at 136, which was the POC of the opening session yesterday. Yesterday, the POC was at 136 in the 23,500 call. These line charts and the option table is specific to the current weekly settlement. So for the next weeks, you will need to go with the higher time frame, which is the weekly and the daily value area charts, and then based on that you have to build positions. Because what we are doing, we are looking only at the current weekly settlement, because the highest volumes in the options are only happening in the current weekly settlement. So we want to make use of the opportunities which are coming now, today. So, and all of this is based on the 3-minute and 30-minute order flow data. So which is why we are looking at setups where we have more probability of winning, and that is why we are using these combinations. Today's session is on line chart, so we will keep it to that. But I'll just quickly answer the question Amit has on the weekly FA. The weekly FA, I take the 5 hours at the weekly initial balance. Abhinav, the e-course is only a platform for you to get to know what the concepts are, to get used to this. That is why, that is the reason we have these sessions, and we also have lot of videos on YouTube, and we have tutorials on the VTrender chart section also, which will help you to pick up all these nuances which we use to take live trades. So I would recommend you go through all the videos and you continue attending these sessions, and one by one clear the concepts and see how you can make use of them in live markets. We also have a weekly webinar every Monday where we discuss what happened last week and what we can expect in the current week. And then we have these kind of educational sessions where we pick up the concepts and show how we can make use of them. So, any more queries, guys? Abhinav, as just mentioned, every Monday we have the weekly webinars, and on Thursday also. Monday and Thursday are the sessions at 5 p.m. We have these sessions which you can come across. And we update this on Twitter as well. So you will definitely be, and YouTube/VTrender is our channel on YouTube. So you can subscribe to that, or you can follow us on Twitter, where we do update whenever we have a session. Shiva has a question about FF in NF from yesterday and BNF from today, but both are different instruments, Shiva. So we have to trade both accordingly. Bank Nifty was flying yesterday. We made a double distribution trend day yesterday, whereas Nifty was a neutral day. So both are different instruments and we need to trade them separately. So fine, guys. I think that is it. So thank you for joining in, and hope this was helpful to you. And we look forward to coming back again with such sessions, and so that we can continue to learn and grow using what we have on VTrender charts. So you can connect with us. You can mail us at support@vtrender.com, or you can connect with me on X. My ID is at Uttam Goel. For any queries, we would be happy to get back to you. Thank you all for joining in. Signing off. Have a great evening.